If you followed Airbnb's most recent earnings statement, you'll know that they just posted their most profitable quarter to date. But as an owner, you might be looking at your booking calendar and wondering, actually, going into winter, things are really slowing down. Is this momentum actually going to continue? Is the so-called Airbnb bust here, or is this all a little bit overblown? Let's take a deep dive into the data, review things from a macroeconomic level, and make some assumptions for the next 6 months of vacation rental travel. My name's Norm, and I run Duchesne Hospitality Services. We're a consulting and training company focused on vacation rentals and hotels. And if you find this video helpful, please consider liking and subscribing, and you can find my link to the website in the description below. With that being said, let's get into it. First off, let's take a look at the data and see what Airbnb's earnings statement told us. Airbnb has increased their revenue year over year by 29%, topping $2.9 billion. The revenue increase was driven by growth in the number of nights booked as well as the number of experiences booked, but also was driven by an increase in the average daily rate, or the ADR, which I'll be calling it from now on. Their Q4 guidance for this year is between $1.80 and $1.88 billion. It's to be expected that revenue in Q4 will be a bit quieter than Q3 being the July, August, and September months, which are traditionally much busier for travel than Q4, which is October, November, and December. Just due to the winter coming, people don't tend to travel as much. School is back in session, so there's a lot of things going on that you'll typically see a slowdown in travel. Of course, the exception to this would be in warm weather destinations like Florida and the Caribbean, where things are actually usually get a bit busier in the wintertime as people are looking to get away from the snow for their vacations. Many of us experienced or even participated in this summer's hot red travel season. By most metrics, it was historic. Occupancies returned to pre-pandemic levels, people were willing to spend more money, and hopefully as a host you took advantage of this as well. Of course, there were a few things boiling underneath the surface, so let's take a little bit of a deeper look into some of the other things that are going to be affecting what's happening this winter in the market. As we all know, a war has been raging between the Ukraine and Russia. This has driven up fuel prices and has increased the price of just about everything. You've probably experienced it a bit yourself, whether it's increased cleaning costs, utilities, maybe you have more dry cleaning costs. It is affecting everybody right now, so you're not alone. And by midsummer, inflation had hit a multi-decade high, topping 10% in some markets. This has forced governments to increase the interest rates on borrowing, so this has had a negative impact on real estate as well as the cost of borrowing money. We all know that one of the buzzwords over the past few months has been recession. Most governments have been warning that their economies will be slowing down as we enter the winter. Between the issues of inflation and recession, this has created some jitters in the accommodation services market. But it's not just a demand issue that's going on. There's also a supply issue, and let's dig a little bit deeper into what's going on that side. Many people have been looking to short-term rentals as a great way to make extra money, and historically it has been. However, over the past, I'd say year or two, we've started to experience a huge growth in supply. Take a look at this chart comparing 2021 and 2022 in 6 major Canadian markets. The orange lines show the percentage increase in listings, and you can see that there has been quite a large increase across the whole country at around 35%. This trend is similar in other geographies as well. I mean, people want in on the success of vacation rentals, and you can hardly blame them. I mean, you're investing in a traditionally stable market in real estate, although the prices have gone down in most markets since interest rates have increased. And you're also making extra money on the side. So it's a bit of a win-win situation. You know, you have your long-term growth potential by having that asset, but you're also making short-term money, helps cover your mortgage and any extra costs. To recap, driving down demand, we have high inflation, we have high interest rates. We're also entering winter, which is a quieter traveling season for most of us. And economists are saying that a recession is looming, affecting the supply. So we have an increase of supply. There's increased competition for short-term rentals with more units entering the market. But what's actually going to be happening here now that we have, so much more supply and decreased demand? So going into this winter, I think that we can make a couple safe assumptions. First off, ADR and your occupancy rates, I think you can expect them to be going down compared to not just the summertime, but last winter as well. Excluding the traditionally warm weather markets that I had discussed earlier, I think that most of us can expect a decrease in average daily rate due to all of the aforementioned issues. People are not as likely to book an expensive rental if it's going to cost them exponentially more to actually save for that experience. As well as there's more units in the market now, so people can shop around, they can look for a better price. In winter destinations like Florida, the Caribbean, places, that usually rely on the snowbirds coming down and vacationing in the sun, I think that we can also expect lower occupancy rates and probably a bit of a decrease in the average daily rate there as well. You're also going to experience a shorter booking window. In times of uncertainty, we can usually expect the booking window will compress a bit. People tend to wait longer to try and see if a better deal will come available, and that will affect how soon your calendar is going to fill up. And with lower demand and higher supply, people can afford to wait because they know that the entire area is not going to get booked up as quickly as it has in the past. I also expect that some owners will leave the market to go towards long-term rentals, so just your traditional landlord-tenant agreements. People might be doing their own economic assessments and realizing that there are too many units in the area that they are in and can do better with a traditional tenant homeowner agreement, just getting more of those long-term rentals, and that'll help you out as well. But I don't think that there will be a lot of people choosing to go this. I think that this will be more of a long-term game. I mean, you also have more and more people who are joining the market, who are transitioning to short-term rentals because they see that there's more of an economic opportunity for them. So what are some things that you can do to stay ahead going into this time of economic uncertainty? The first thing that you can do is to get professional help. Finding a consultant or an advisor who you can trust is a really good way to ride this wave of uncertainty, to know that you'll come out of this on top and that you're well positioned to beat the market and beat your competition. There are a lot of advantages to having somebody with experience who can help you with your short-term rental and who can price you appropriately, come up with a proper plan to get you ahead, and usually the benefits will far outweigh the costs. If you want to go alone, that's totally your prerogative, but the number one recommendation that I can make for you is to expand your reach. If you're only listing on one OTA like Airbnb, or if you're only on two even like VRBO and Airbnb, I would highly recommend that you look on expanding your reach so that you're seen by as many eyes as possible. Listing on other non-traditional vacation rental websites that are still seen by a high volume of people like Booking.com or Expedia are really healthy ways to expand your growth and ensure that you're in a well-positioned place for your vacation rental. Along with that, you may want to consider developing a marketing strategy to be seen by even more people. And one other thing that you might want to think about is if you can handle it and if you can ride the wave and you can take some time off, it might be a good time to do some renovations. Have you been putting off a renovation project that you've been thinking about doing for a while? Well, I think that this is a great time to do that project. I usually look at times like this, times of uncertainty, as an opportunity so that you can take the time that you need to get ahead so that when you're on the other side of this, you're well positioned and you have something to differentiate yourself from the rest of the market. And I think that this is especially important in an age that we're seeing so many people entering the short-term vacation rental market, that you're going to want and need something that differentiates yourself from your competition. Well, this video is getting a bit long now, so I'm just going to stop there. I hope that this has helped you realize what to expect in your market going into the winter this year. For some people it's going to be a tough one, but if you know how to play the game right, if you have a plan, if you're getting the right help, you can definitely beat expectations, and you can definitely flourish in this market. And I want to hear from you as well. Have you been experiencing a bit of a slowdown in bookings? How does your calendar look going into the winter? Let me know in the comments below, and as always, my name's Norm. Happy hosting. I hope you all have a great day.